All right. We can go ahead and get started. People are still filtering in, but I'm going to start with this disclaimer. This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever. And as always, you can catch this recording at our lovely media partner, Blockchain Radio, and on our YouTube channel, Draper Goren Holm. And today's topic is all about DeFi, decentralized finance. And we have some pretty kick-ass people with us on stage right now. A lot of them, or I think most of them, or all of you guys, we can kind of thank for all this adoption, all this activity, all this excitement in DeFi. So I don't want to go and introduce you guys. I think you guys can do a better job. So I want to start with Anton. Tell us who you are. Tell us your company, your project, and we'll go from Fernando, Medha, and we'll end with Kain.
Hey everyone, my name is Anton Bukov. I'm co-founder and CTO of 1inch Exchange. I'm pretty sure most of you heard of it. Thank you.
Cool. Fernando.
Hey guys, I'm Fernando, co-founder of Balancer. Yeah, really excited about DeFi. I've been around crypto for a while. Been a fan of Ethereum since the inception. Contributed with MakerDAO a lot, and yeah, very, very happy to be here and exchanging with these great people. I talk usually through other channels, so it's nice to be talking in front of a lot of people as well.
Cool, cool. Thank you, Medha.
Yeah, Medha Parlikar, CTO and one of the co-founders of CasperLabs, the company building the Casper protocol. And real excited to be here. Been on a few times. Adam's a great friend of ours, as is Draper. And yeah, just really excited to be building a new layer 1 protocol to help solve some scalability problems without sacrificing security. So that's what Casper's all about.
Cool. And Kain.
Hey everyone, Kain, the founder of Synthetix. We are a synthetic asset issuance protocol on Ethereum. Yeah, excited to get into some interesting discussions about DeFi and yeah, let's do it.
Cool, let's do it. All right, so Kain, first off, okay, you're the last one speaking. There's a bunch of different levels of expertise joining us today, and that will be listed in this later on. Quickly define what is DeFi, what is the decentralized finance. We can kind of take it from there.
Sure. So I think, you know, DeFi was coined back in like late 2018, and at the time it was, you know, like SEP protocol, Dharma, a couple of people getting together trying to work out like what is this specific category of thing that we're building on Ethereum. And I think, you know, we still don't have a perfect definition of what DeFi is, but I think ultimately what it's aiming for is to provide open access, to provide non-custodial access, so to allow people to custody their own funds for good and ill, and to allow for interoperability. Right, and I think the poster child for that is probably 1inch, right? So 1inch goes in and pulls all these different protocols, Synthetix, Balancer, Uniswap, everyone, right? And puts it all together and allows someone to turn up and basically access this pooled liquidity across the entire DeFi ecosystem in a single interface. And that is, like, I guess to us now kind of an obvious thing, and it's really cool, but it's unprecedented in finance. Like, you can't just turn up and go and like aggregate, something from Wells Fargo and something from Citibank, and like it's not possible, right? And so I think that the core thing is this open access that anyone can turn up at a hackathon and over the course of a weekend, stitch together all these different protocols and have an amazing new interface that people can access.
I love it. So just to give an overlook, so 1 year ago today, we were at about $830 million locked in all these DeFi projects. Today, it's I think it just crossed 25 billion, right? So from 830 million to 25 billion, that's explosive on a whole nother level. I want to pick each of your brains really quick and kind of hear from each of you what has led to that growth. And we can start from Anton and work our way down. But take it from here. What has led to that growth? What has led from 830 million to $25 billion locked in DeFi projects? And it could be, it was like, it's a various, like we can unfold this, we can dive into the details, but we can do it from a surface level perspective right now.
Yeah, okay. First of all, this huge number is not like exact number of funds locked in, because part of these funds are like over collateralized. So I'm not sure exact numbers. It's possible that it could be like 20 billions of funds, but 5 of them is like borrowed and recollateralized. I'm not sure about like exact coefficient, but it's like lower than 25, maybe 15 or 20. Not sure about exact numbers, but like what bring us to such numbers is like DeFi projects explosion and farming explosion, which happened in previous year, like started in previous year, but actually like it was started by Synthetix protocol in the middle of the 2019. I checked some numbers this time, and it was like in July of 2019 when Synthetix project, they proposed to make rewards for liquidity providers. And this incentivized people to put more money into on-chain protocols. And then we saw that this strategy was utilized by a lot of different projects. Even lending protocols started utilizing this idea of rewarding users for using their protocols, not only for putting assets as collaterals, but also for getting some debts, for borrowing something. And people started to put collateral, borrow something, swap it to something else, put as collateral again, and have like a long or short position, like leveraged position, which like turn it there. Like, for example, someone put it $1,000, but actually he made like 3K TVL, like total value locked. And this like all helped to expand the total value locked of all the DeFi from my point of view.
Fernando, do you have anything to add to that?
Yeah, I think that one very nice thing about liquidity mining in Synthetix is the pioneer here, and we all learned from them and used the concept. I think the coolest thing, at least from my perspective and Balancer's perspective, is the fact that you're distributing ownership of your protocol to the users of your protocol. It's like, imagine if Uber could give a tiny slice of Uber stock for everyone who either rode or drove Uber in the last years. Like it would create a lot more a lot more loyalty. A lot more people would choose Uber over Lyft or any other competitors, because by using it, you're becoming owner of it as well. And this is so much more important for protocols like ours and DeFi than it would be for a normal company, because it's all about governance, right? The real winners, in my opinion, will be those who make the right decisions. And to make the right decisions, you have to have a good process in place to get people who have skin in the game, to be involved in those decisions. Right? If you're centralized, like you see this in history, like dictatorships, they move very fast and they grow faster, but at some point, like you need to be the democracies are slower, but they tend to last longer. So I think that the DeFi protocols will need a lot of different users and different viewpoints to make the sustainability possible. So I think liquidity mining is all about giving ownership to lots of people and making sure your project is really decentralized. To the astounding increase in value that you just mentioned, Adam. I think the fact that ETH has gone up so much in that period is very important for that to be possible, because Ethereum, like the Bankless guys, Ryan and David, they say it's like the economic bandwidth of DeFi today, right? And we're seeing cool stuff like Bitcoin being wrapped onto Ethereum, which has also brought a lot of value to DeFi and to Ethereum. And I'm sure we're going to see that happening more and more with other assets, not only Ethereum, but like oil that you can buy today on Synthetix. So I think the future is bright. And not saying that other layer ones to build a segue to you, Meta, not saying that they cannot be successful. But today, I think that the DeFi is today on Ethereum. So it will be great to see other niches going to other layer ones as well.
Yeah, absolutely. I mean, Ethereum has a ton of liquidity on it. There's absolutely no question that they've got a great tranche around themselves in terms of liquidity. One of the things we are seeing, though, is with the gas fees and the saturation on the protocol is making it harder for new entrants into DeFi, arguably, if the transaction fees, right? You can't do small transactions, even in DeFi, because your transaction fees really, can become pretty prohibitive, right? Depending on how quickly you want your transaction to go through. But absolutely, like I mean, if you ask me why I see there's so much adoption in DeFi, one word just immediately comes to my mind, and it's greed, right? That's what's fueled mass adoption of any kind of brand new type of mechanism for making money, right? So do I think we're in a bubble? I certainly hope we're not in a bubble, right? I certainly hope that DeFi is not experiencing a bubble right now. Maybe to a certain extent, there might be some particular protocols that may having a bubble, but I'm hoping that there will be, more innovation so that we're not just seeing it bubble in a deep niche, but rather we start seeing new innovative protocols come out versus just kind of like, the copy paste model, right? So I think you've seen a lot more DeFi protocols come out that have just gone for a quick, money grab, right? Instead of innovating, they're copying other protocols out there. So that's my take. I would love to see more innovation in the space. I think DeFi is just a wonderful egalitarian offering to provide better and open access. It really brings to heart what blockchain can do, and completely agree on the governance piece. I think governance is hugely important, and governance that's transparent and decentralized is really hard to accomplish. It's not an easy thing, right? And I think the blockchain can play a big role in supporting, even the governance of these protocols.
I saw you kind of nod your head when she said DeFi bubble, and like you looked up for a second. What came to mind right there?
I mean, I think there's no question that there's a lot of speculation going on, right? But I think the point that Fernando made about Uber versus Lyft is kind of interesting, right? Because when you think about market dynamics, so I'm a big believer in markets, right? I think markets ultimately are one of the best ways of us discovering what has value. Even if they might be somewhat inefficient initially, over longer timescales, they're fairly efficient. And I think giving away equity in Uber and Lyft creates this additional market dynamic whereby it's not just the usability or the value prop for users and what they're paying for, it's actually like the long-term alignment, right? And so, you end up with this situation where if Uber and Lyft were tokenized, now you've got people that are holding Uber tokens versus holding Lyft tokens, and they either believe in one or the other and they sell them, versus like, a very inefficient VC driven market where it's a couple of large players who are making extremely large bets on subsidizing these new entities like Uber for 5 or 10 years while they're not profitable, and I just think that that's a much more efficient market dynamic, and I think it's why we see this extreme competition and maybe much faster iteration than in traditional startup economies, where you have much longer timescales to get to some kind of liquidity event or an IPO or something like that.
So is there anything beyond that you kind of that you kind of saw drive a lot of this adoption in the total value locked in DeFi?
I think, it's ultimately incentives, right?
Sure.
We actually have a thing that does something for the first fucking time in like 5 years, right? Like, we had all these tokens that were like supposed to be like payment mechanisms for random shit, and they didn't do anything for a very long time. And all of a sudden you can actually go into DeFi and you can do things. And yeah, a lot of that stuff is speculative. It's yield farming. It's, weird games and Ponzonomics and stuff. But also, like, you're providing liquidity. Like, I'm a liquidity provider in both 1inch and Balancer, right? And I'm a passive market maker. I get fees from the protocol. I get, ownership of the protocol. I can actually do something. And so I think that's sucking in things like Bitcoin. ETH holders that have just been sitting on ETH for years doing nothing with it are now bringing it into DeFi and providing liquidity. That's a very different dynamic to what we had in 2017, where it was just pure speculation. There was no actual utility, no usability going on.
And Fernando, I kind of saw you nodding your head a lot. Do you have anything to add to that?
Yeah, I agree a lot with Kain there. Like, pretty much everything he said makes a ton of sense. And I mean, like, there's so many people now working on DeFi and Ethereum specifically, building like things that like we haven't heard, like 5% of them. There's like all sorts of new AMM styles, and there's like different synthetic options, calls and puts, and there's so much being built on Ethereum DeFi that's of course based or inspired by conventional traditional finance, but it's built in a way that's accessible by anyone anywhere in the world. It's permissionless, it's open, it's disintermediated, so you don't need to pay like high fees to privileged people that just happen to be owning the exchanges that rule the world. And it's just only just beginning. I agree with Kain that we've seen a lot of bullshit for a long time, but now like more and more of the infrastructure is being built, and you have like all the small building blocks that you need to build something great. Like Kain said, during weekend you can build something great because you have all those tooling, all the tooling that you need to build things. So yeah, I think we're just starting to see like the tip of the iceberg, and there's like so many things that inside DeFi and outside of DeFi that are being worked on. You look at the number of developers that are working on DeFi and Ethereum today, like it's crazy how much more it is than anything else. So yeah, I'm very bullish. I'm very bullish there.
Yeah, and obviously we can all agree Bitcoin is performing tremendously well, right? Without a doubt, a large portion of that being the institutions, right? Everyone's yelling, the institutions are here, they're coming, they're here, whatever it may be. So they're in Bitcoin now, and we're all reading headlines that they only care about Bitcoin, which I think is complete bullshit, right? Obviously, they're seeing all these amazing returns and all these different use cases being built strictly through software. Do you guys imagine big institutions jumping on the DeFi train now? Like, Anton, can you imagine like Robinhood releasing their own DEX, for example? Maybe that's like too far down the line, but I'm throwing ideas out here.
I believe it's possible, but not on layer 1 right now, because the transaction fees would like kill whole the idea of Robinhood, because it was all about investing small amounts of money, like every day, like every month, every week. But if you would spend tens of bucks on commissions of Ethereum network, it would not work this way, for sure.
Okay. Well, anyone else in terms of like institutions jumping on the DeFi wagon, right? And while headlines saying, go ahead.
They're very heavily regulated, right? So this is the problem, right? Banks they're very heavily regulated. They have their bread and butter business right now. No question that they are absolutely prototyping blockchain technology, but they're looking at their bread and butter business very, very carefully. And you know, just like all large enterprises, they don't need to be on the bleeding edge, right, for adoption. They're going to take a look at what blockchain technology can do, public blockchain technology can do, and they're going to slowly adopt as their market, as their customer bases start demanding, you know, greater options in terms of, DeFi instruments. I don't think they're nervous yet. I think that they're probably like 3 to 5 years out before even seriously bringing any kind of consumer products to market. Big enterprises or entrenched market players have never needed to lead in terms of adoption, right? They have enough of a customer base that they can wait and see how things play out.
And I kind of see nodding your head again, looking up to the left. Do you have anything to add to that?
Yeah, look, I totally agree, right? Like DeFi, the more complex the thing, the more that it does, the harder it is for a legacy regulated entity to engage with, right? So Bitcoin is nice, right? You just hold it. It's the digital gold narrative, a hedge against inflation. It's pretty simple. It's a simple prospect. You just go to an OTC desk and you say, hey, I've got $1 billion in this shitty fiat money. I'd like to convert it into Bitcoin, please. And that's it, right? DeFi is, and Ethereum is a different beast. And it's going to take a bit more time for people to get their heads around it, I think.
What do you guys think is missing? What's not there for more of these larger players to jump on? Is it more validation? Is it like, what's missing?
It's not what's missing, it's what's there. There's so much complexity that it's going to take a while for that complexity to kind of be wrapped into something that's comprehensible to a large regulated institution, I think. So I think there's just so much going on that it's hard to even know where to start to engage.
I mean, from my perspective, I think it's control. I actually think that these large institutions, their regulation, that by nature of the regulation, there are certain actions they need to be able to take on behalf of their customers, right? And they don't have that control. That's why it's decentralized finance, right? So there isn't a central point of control, and it's completely flies in the face of the way they do business. And I literally think it's like it's apples and oranges. They need something completely different than what Ethereum brings, because by the nature of putting a protocol on Ethereum, by definition, it's decentralized, right? You forego any kind of central control, and they just are not. They can't operate that way. It's not the way they're regulated.
Yeah, and I think, go ahead. You want to add to that, Fernando?
No, I was just going to say that I see institutions coming to Ethereum first and then DeFi. Ethereum is a no-brainer because it's like Kain said, just buy it and hold it. And people are just a bit more scared about Ethereum because it has less of a Lindy effect. It came after Bitcoin. There's no fixed maximum supply like Bitcoin. But if you really stop to think about it, it's just a meme, right? Everyone knows that at some point, Bitcoin will either fail or have to do something about the supply there, because the security just goes away as you go to zero fees. And if you use it as a store of value, there's not enough fees being generated by transactions. So it just makes no sense. So it's kind of clear that you need some continuous inflation to make sure that you have enough security. And like, this is debatable, but to me, it's obvious also that proof of stake is a lot more superior than proof of work. And at some point, Bitcoiners or people who hold Bitcoin will be paying for the trillions of dollars that's spent in electricity, I don't know, every year, like countries' worth of electricity, while Ethereans are not paying any of that. It's just like staking their ETH. So I think at some point, and I'm a firm believer in the flippening in the next 3 to 5 years, it's to me going to happen. And it's going to seem so obvious, right? People say, "Oh, it was obvious." More developers, a better monetary schedule or inflation. Now the 1559 coming that will burn the fees instead of sending it to miners. So Ethereum will be like a much larger. Will have a lot more capital bandwidth, and that will kind of bring more value to DeFi as a consequence. It would just be a natural step, even if it's complex. And there's like companies and protocols doing insurance, companies doing like Argent doing like social wallet recovery. There's so much being built in terms of tooling that it will feel more and more. And when we go to layer 2 and get scalability, it will feel like it's like Web 2.0. So it's maybe a couple years away, but it will happen, in my opinion.
So on that, because you started name dropping different services and products, right? What are like the most exciting products or that you see being built right now that are going to extend and you think are going to gain traction in 2021? And second question, follow up, what are some of those untapped opportunities that you guys are seeing are like clear indicators that people need to jump on and build more in this specific area of DeFi? So it's like a two-part question. And we can start with you, Fernando, and we can kind of distribute it.
I think insurance I just mentioned is a good one. Identity, all the complex financial instruments like options and yeah, all that stuff. Yeah, Kain, maybe you can take the hook and
well, I've been waiting to drop this one for a while. The virtual synth bridges that Anton should be working on right now, except he's too busy on panels. So we've got I think a big area that I've been talking about for a while that kind of we haven't been able to take over is OTC, right? Like large block trades. And now with so much wrapped Bitcoin on Ethereum, block trades between like ETH and BTC and stable coins and ETH, stable coins BTC are still not quite possible. So we've been working on a solution for this, but it requires, I think, a little bit of integration from something like 1inch to kind of aggregate that will allow very large block trades like 10 million, 15, $20 million trades on chain. And so I think that that's something that is going to really, disrupt the OTC desk market over the next kind of 12 months. But the other thing, which is maybe almost a counterpoint to Fernando, is layer 2, right? So we're seeing the emergence of layer 2 solutions like optimistic Ethereum, ZK Sync, and I think that could have like a potentially a negative effect on demand for L1 block space, maybe in the short term. So as much as like fee burning in 1559 is going to have a potentially positive price effect, I think that we could go back to a scenario where there isn't that much L1 activity until we get these aggregated layer 2s that are pushing transactions back to L1, starting to soak up bandwidth. But that could be a while. So I think that could be maybe some headwinds against this ETH maxi. Sassano's gonna take my ETH maxi. He's gonna confiscate my ETH maxi badge. But yeah, I do worry about that a little bit. That layer 2 could have a negative effect on some of the ETH price action.
Meta, Anton, what do you guys envision as being like some of these new opportunities that are emerging for the coming year?
I see identity as a huge opportunity right now. I don't see an identity player really emerging in terms of self-sovereign identity. I feel like self-sovereign identity is really important. Users being able to own their own data. If you look at where the internet started, the cypherpunk movement, it was supposed to liberate all of us and be this big egalitarian thing where you could share information. And in the end, it wound up really being a massive mining operation for user data. And so for me, I feel like there's a huge opportunity, for self-sovereign identity. And I feel like it's a really important thing from the perspective of, bridging the regulatory gap, right? Like there's this regulatory piece that needs to be solved for. But the way to do it is self-sovereign identity versus even an identity service using a blockchain is still, they can still be compelled to, that data can still be mined right off of the public blockchain. So there are some self-sovereign identity solutions out there that are really interesting where, I can choose whether or not to reveal my identity to any provider in the space. And something like that, I think, is massively important. And getting it right is really, really important for all of us, right? To protect our information for the long run. Yeah. Anton,
anything to add to that?
It's hard to add something after everyone said all these things about like OTC, virtual scenes, layer 2 solutions, which are coming to bring like a real mass adoption, because currently like 3 million of people are interacting, 3 million of wallets are interacting with Ethereum every month, and it couldn't be changed without any like movement to layer 2 or upgrading of layer 1, because it's like the amount of wallets interacting with Ethereum daily, weekly, and monthly is not growing for almost like half a year, and only those wallets are using it who can pay more than others. And that's really sad, because gas prices works like a thresholds for those who can afford to spend such amounts on gas, and those who can't afford this. And I really several layer 2 solutions, like Kain said already about them, like Optimism and ZK Sync. They're like quite different and can offer quite different things, but they both are gonna solve scalability issues of Ethereum. Yeah, so I think, yeah, I also want to add about, like Matt has said about bubble. I have also opinion about this, that there is like a very high chance, I'm like almost sure it's some like significant part of DeFi is going to be a bubble, and we don't know when it will reach its limits. But you know, there is nothing wrong with this. We see like market is moving on some kind of spiral, and it repeats itself like in a 4-year cycle potentially. And you know, all this bubble popping is not a bad process. Actually, it helps projects to become like stronger. Those projects who like can live, can like be real projects, and bubble popping will kill some projects which are like less effective, ineffective, or they're actually not working on the market. So it's like, I believe it's like natural process of the market, like bubbling, bubble popping, like this.
So on the terms of bubble popping, I want to go into the comment section, because we have a lot of comments of people asking stuff. So just to carry on what you were saying, Anton, and feel free anyone to kind of jump in. So crypto projects are providing high returns very, very quickly, many of which are courtesy of ICOs. However, are these returns sustainable, right? Can we carry on these explosive returns, especially right now with alt season? I see Meta nodding her head. I'd love for you to kind of like take the conversation.
I mean, if we look back at history, the answer